What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you subscribe on YouTube. If you're not already, go to coinmastery.com/YouTube. Hit that subscribe button. Make sure you hit the bell too to get notified. That's how we're letting people know about this. And if you want the audio ever, you can go to coinmastery.com/iTunes for Apple, or you can go to coinmastery.com/Android for the Google Music version. You might have to go search for it. Still trying to figure out the best way to do this on Android, but make sure you go subscribe for everything. Follow up. We're doing Monday through Friday. We are doing daily cryptocurrency analysis, specifically trying to fuse the micro market dynamics, a little bit of technical analysis, even though I'm still getting my feet wet in that, and blending that with macro and fundamental analysis, which is really where my strength has always been with investing, with markets, with things like this. And I'm trying to blend these two with the entire goal of helping you make better decisions about how to capitalize on what I consider to be the greatest financial opportunity of our entire lives. I truly believe that. And this is all about that, is how can we capitalize on that the best? What decisions do we need to make the most money from crypto over the next 6, 12, 18 months? That's what we're doing. That's why we're doing this every single day. So thank you for joining. Very exciting. Now in the last 48 hours, we've had some interesting things happen, right? If anyone's new to crypto, when I say new, in the last month or so, this may be one of the first big kind of sustained corrections you felt, which, it's only been a couple of days, but it still feels like an eternity. If you've been around for a couple of months, this is probably your third or fourth big one. If you've been around for a few years, this is one of the, this is just kind of another bump in the road that you kind of get used to, especially after that 2013 one. But it's been interesting, right? I think it's been interesting both from, to seeing the market dynamics, and also from what I'm really interested in is how do people respond to this? What's the fear level? What sort of decisions are being made? What sort of actions are being taken? Are people selling out of panic? Or are they buying? And the good news is I can say, especially for you guys, a lot of people that I talk to, a handful of you guys on Twitter and email, a lot of you guys definitely seem to be making good decisions where you're starting to buy when there's blood in the water, in the streets, and taking your profits when it goes way back up. So that's awesome to see. Stoked on that, and really just capitalizing on the opportunities that are presented to us. The altcoin market, always good to see a lot of green. I think one thing that we'll talk about is that this percentage change column is a little not misleading, but it's important to remember that this is, I believe, is from a 24-hour, maybe even 12-hour change. So if you see a big increase, the price itself, so let's use OMG, which was one of the coins that we've been talking about, especially on Twitter. Been talking about this all weekend, talking about buying in. We bought a little bit over the weekend, or I bought a little bit over the weekend up here. And then I bought a bunch yesterday right around here, and then again right around here. And OMG, I think, is just a great one. But the reason why I bring this up is when you look at that percentage increase, it's pulling from a relative low, right? Not necessarily you've made that exact percentage increase. It just means that that's how much it's come back from its low. So I just want to put that out there, so just for clarification. So if you see, oh man, Komodo went up 27%, you make sure you look at the price, and then you look back to where either you bought it or you're watching it, and make sure you're not actually looking at the same exact price. Make sure we're that 27%. But it's always good to try to think about that, because for you, when you're making decisions, you want to remove things that cause emotional responses. And this is one of those things that could easily cause emotional responses. Let's talk about Bitcoin, because obviously Bitcoin is the market. Now, any TA, technical analysis people out there, I know Coinigy is down right now. I can't use Coinigy. That's why I'm using these really sketchy charts. And I'm to be perfectly honest, I know that there's multiple ways to draw these charts. This is just I'm trying to paint a very general picture for everybody. We talked about how the other day, how this line, this trend line, which is kind of the bottom of the what's called a channel, was the most important line. And on Twitter, you can see this where we crossed it, and that was kind of the main kind of what's going to happen next. This trend line is a really good place to start if you're wondering, hey, how far down is it going to go, assuming that this upward trend continues. And we'll talk about what that means in a second. Now, this top line, different people may draw it in different places. Like they might go from here to here, and then you get an open fan type of thing. But either way, this is kind of, if the bull market continued, this is the channel that it would continue through. So you'd see a little bit of a swing, and it would come up to this top bar, and then it would swing again. If you're listening on the audio, I'm just looking at a big view of Bitcoin right now. And we're looking at the ups and downs over the last couple of months and talking about how if this keeps going up, it's just going to go up and to the left, up and to the right, I'm sorry, kind of how it's been, what it's been doing. And that's still a pretty steep curve. So if that continues, great. But that also means that the pullback will eventually be bigger when it does pull back. And it's going to in the next few months or 6 months or 12 months. We're going to prepare for that. It's just good to keep that in mind. We'll have a plan in place for that. Now, the other thing to keep in mind is that while this looks great, and you may be saying, okay, well, you know, we're coming back off this line, and let's just go and continue this party as always, which that'd be awesome. You know, maybe it will happen. You also want to look and see if this bull market, if this bull trend is actually changing. And the way you do that, and I'm going to switch over to a 1 hour chart because it's a little easier to see this. Again, I know Bittrex, I know these charts are terrible. I get it. This will be the last time hopefully I ever use them. But you want to go from the top, let's say down to this peak. And then you also want to do from this bottom down to this bottom. And you want to see if this, what is a kind of smaller bear trend, what you're really looking for is, can it break through this, this line? Now, before this happened, people would draw it to this peak, right? So now what's happening at this exact moment would be considered a breakout. This is what the real conversation around Bitcoin is going to be for the next day to 2 days. It's going to be, is this channel going to hold its formation? Like, is the price going to keep coming down this way? Or is it going to go back to that bull trend that we looked at? And is this going to break through and we're going to go up and to the right again? So when you are looking at the markets and you are wondering to yourself, is this over? Can we move on? Should I buy in? Whatever. This is the kind of thing that you should be basing on. This is pretty basic technical analysis. You can see that I'm using Bittrex. I'm doing it just as well as you could. And you draw these trend lines, and then you want to see the, this trend line isn't very exact, but you get the picture. You want to see these breakouts, and then you want to see them stay there, and you want to see enough volume that can hold it there. We'll keep coming back to this. This is kind of basic technical analysis. But the long story short for you is that we've potentially evened out after the downturn of the last couple of days, but I wouldn't fully say we're in the clear yet. We want to see what's called confirmation from this breakout on the downtrend to point to the fact that, hey, we're on our way up. If it doesn't do that, if it keeps going down, then there's a whole new set of technical analysis. So keep that in mind. And the reason why I've been talking about technical analysis the last day or two is because when you're looking at limits and market trends, this technical analysis can actually be much more helpful than fundamentals or macro analysis, which is what I usually look at, because you can see a lot of the trends, like the decisions, all the collective decisions are all baked into the charts. And so when you're looking at different limits, like how far down is it going to go, how far to the right, how far, whatever, the charts are typically where the answers lie. And then when you're looking at what are the future trends, what are the coins to pick out, what's undervalued, what's overvalued, where's the demand going to be, what's driving these decisions, that's where the macro stuff comes in. So you see how these are both, you got to know both. I saw a great post on Twitter from a guy who's been trading for years, and he was saying how one of the best things you can do if you're in crypto is learn all the different parts of crypto. So understand what blockchain is, understand things like mining. Even if you're never going to mine in your life, just understand how it works, because proof of work coins, which are mined coins, and proof of stake coins, which are typically fixed supply coins, they act very differently in how they work in a chart and how they have futures. So if that sounds foreign to you, I would encourage you to go Google it, because the more you know about the economics and about the way that these charts work in relation to the markets, the more informed you'll be, the better decisions you'll make, and inevitably the more money you'll make, because you'll see things that other people do not see. So that's what Bitcoin is. I can't tell you yes or no, I think that this is done or not, because it's still pretty ambiguous. And these are the kind of bets that I don't want to make. I don't want to bet that this is the bottom. I would bet on a year from now, but I'm not sure I would bet on micro stuff like this. So I'm waiting for this to either break through big time or to continue down before I make any other moves. Let's talk about NEO. Yesterday in the video, I talked about NEO and how I wasn't going to buy any NEO, and I haven't. And the reason why is because when I look at the chart and I look at this price, I think that the valuation is overinflated. Now, do I think NEO could become the biggest thing in China? 100%. It absolutely could get humongous. But I'm just saying that the run-up, the speed of this run-up was too fast for me. And I think that plays a big part in this drop down kind of this healthy correction level. When you look at NEO more acutely, and Bittrex isn't the best place to do this. I wish Coinigy was better. And you can look at some different programs like TabTrader or TradingView might have better charts for the volume. And you can always open up this study on the volume here. And red and green for volume typically you don't really want to use colors, but that's not very helpful. One thing that's really interesting, and you guys will start to see this sort of thing, is when you get a big drop, or even when you get a big pump and then a big drop, and you see really big volume, but you see price just sort of creep along like this. Typically, that means that somebody is accumulating a lot of coins. And when you see that on a coin that's this big with this much volume, and again, this volume chart doesn't really do it justice, you can learn a lot, because if there's that much volume and the price is just hovering there after a huge drop, that's the key. It's got to be after a huge drop. Somebody is buying a lot of that, and they're trying to keep the price low while they buy more and more and more. So while I don't necessarily think that this top price of NEO is justified, I do think that the fact that there's enough volume to justify this accumulation, that may be a good reason to buy it, at least to own some for the long term as a hedge, just in case this accumulation was done by somebody who really wants NEO to go big, right? Maybe someone in China, maybe a government in China. I don't know, right? This is a different, theory, but it may be a good hedge. I don't know if you're gonna be able to flip it for 20%, like a scalp trade, but somebody's buying a lot of this stuff. I don't know who. I don't know what the plan is. I don't know if they're dumping it anytime soon, but somebody's buying a lot of NEO when it's that cheap. So thought I'd share that with you. Again, this chart doesn't do it justice. On other charting platforms like Coinigy, it's a lot easier to see this, but go check that out, especially if you have any sort of trading background. I think that you'll see some interesting stuff there. I mean, the volume is massive with the price not going up. So check that out. All right, I just saw this like half an hour ago. I just tweeted about it. And the reason I'm bringing this up for you guys is because when I'm talking about the next 6 to 12 months, we're talking about how there's going to be new opportunities, but also new risks, and also different paths to making large amounts of money. ICOs are inherently a very risky endeavor, and I think everyone agrees with me. Everyone would agree with that. Like, it's as risky as it gets in many ways, even if it feels like it's the easiest money in the world. It actually is the riskiest thing you can do. But there's still, ways you can do that. You can get better deals, pre-sale, all that. But Enigma, which I would say most people, I wouldn't say most people, many people in the kind of the public sphere pointed to Enigma, other than I believe they had a little bit of a hack early. They decided that after the pre-sale was done, that they were going to add 50% tokens to the entire market or token cap. So let's say there's 1 million tokens in Enigma. They woke up and said, you know what? Everybody really wants us to have more tokens so that we can cater to more people. Let's just raise that to 1.5 million, even though we've already told all these people it was only 1 million and we raised all this money around it. And they just decided that. They just woke up one day or today and said, you know what? This is actually what the new rules are. We already have your money, but this is what it is. And the reason why this is really important has nothing to do with Enigma. I do not know these people. I have no money invested. I'm not trying to do any sort of slander on them. But no matter what sort of due diligence you do, no matter what sort of anything you do, this is always a possibility. And the reason why this is important to you is that I do think ICOs are still an opportunity. I think that there are plenty of other very good ICOs out there, and I want to help you guys get in touch with them. But I think I've met a lot of people that have ICOs as their entire strategy, right? It is their entire focus in crypto is to go after these ICO deals and to get these potentially massive returns. And what I would encourage you guys to look at is that when you think about your overall strategy, you want to make sure that this is a smaller piece of your overall strategy. There's plenty of money to be made in these ICOs. There's plenty of money to be made in any other coin out there. The thing about ICOs is, as you have that risk, you're also giving up a lot of control, right? The developers can decide to do anything. That's inherent. That's part of the game until regulations or whatever. But all I'm saying is that you can still do ICOs. Just make sure it's balanced out with, hey, you're holding some Bitcoin or whatever, Ethereum and Monero or whatever. You're holding some altcoins as your kind of medium risk. And then you're going after ICOs with your high risk pool of money. Because you always want to balance out the different places you're investing. You never want to be all in on one particular thing. Same with crypto. It should be one part of your wealth portfolio. You should have crypto. You should have maybe, let's say cash, fiat, let's say index funds, maybe a house, maybe bonds or whatever. I mean, I'm not saying I recommend it, but it should be one piece of a bigger one. You always want to, you never want to put all your eggs in one basket unless you can control the outcome, right? That's the only time when diversification is not a good strategy, is when you have control of the future, right? So Warren Buffett actually famously talks about how if you don't have an advantage, you should always diversify. But if you do have an advantage, you should never diversify. And until you have an advantage, technical advantage, an information advantage, a marketing advantage, like whatever, until you have that advantage, you should always diversify. When you get that advantage, you should definitely you should not diversify. But I'm not trying to, the reason I'm bringing this up is to just make sure that we're all keeping that in mind. High risk, high returns come with high risk. That's totally fine. That's part of the game. Just make sure it's balanced out. All right. Another great post that I saw yesterday my kind of weekly conspiracy theory. This one is a little bit more, I wouldn't say obvious or anything. I guess I look at this, and I guess conspiracy is less of the buzzword and more of it's about, like, this is just how it's going to unfold. I don't think anyone would disagree that this is how it's going to unfold. And we've been talking about this. What this is really saying is that the ETF, so the Bitcoin ETF, it was shut down earlier this year. Then it was appealed, and the SEC actually allowed that appeal to happen. And now the director of the SEC, in charge of things like ICOs and crypto, was actually on the lawyer team for the ETF to go forward. So that person is actually probably going to be pretty happy about crypto and ETFs going through. And what this article is saying is that potentially the China stuff really was kind of last move before the banks start to move money in and leak out, hey, there's an ETF coming, which will crazy surge in the markets is going to happen. As soon as people hear that the ETF is probably going to get approved, you're going to see a 15-20% jump across the board, across the entire crypto space. You're going to see that getting fueled and built. You're going to see all this mass media start to really get behind it because now they can actually profit from it. And they're going to say, look, Bitcoin is crazy and speculative, but this ETF is something you can buy in your E-Trade account. And that's what's going to happen. And then that just fuels it and fuels it and fuels it. That's what this article is saying. I don't know if I necessarily agree with this 100%. I think I still need to walk through it, but it's always interesting to read other people's perspectives on a market that we spend however many hours a day looking at, and we get sucked into the coins that we own. We look at like, let's say you owned Digibyte. I mean, I don't own any Digibyte. Maybe you do, right? And you spend your time looking at this chart, and then you go and you find articles about Digibyte, and you inherently find articles that reinforce what you want to believe about Digibyte, that it's going to be huge and that Minecraft is going to use it and that Microsoft, all the things. But it's always important I believe, to find people that are thinking about and seeing the exact same market in a totally different way. That's what I try to do in this video and podcast, so that when you go back and look at Digibyte, you start to not only look at, okay, well, can I do a Fibonacci retracement on this curve? You start to look at Digibyte and wonder, how does this fit into Wall Street? What am I not thinking about when I'm looking at this that could potentially make this go way up or way down? And that's just one of these things that just takes experience. It takes time to do. And I try to tweet about this stuff as much as I can. Some people like it. Some people I think are like, hey man, just give me the picks, right? Which is fine. I'll do that too. But looking at these type of theories or perspectives, I should say, hanging out with people or talking to people that have these kind of perspectives, this is where the real big money is made, right? It is these big macro forces. This is the real hedge fund level money, because these are the moves that can facilitate a large amount of money being moved around. Along those lines, I saw a great, this guy, Ari Paul, so at Ari David Paul on Twitter, great guy, really smart investment. I believe he was in private equity or a hedge fund before. Now he manages a crypto fund. And he tweeted yesterday, it's a holiday weekend, and wrong tweet. I was at a barbecue with a bunch of hedge fund traders and managers. 2 out of 10 owned any at all. 2 tried to buy Bitcoin but gave up. 5 out of 10 were curious but wanted to buy, but found it dauntingly inaccessible. And the two who own had small amounts looking to add. Right? So he was at a barbecue with other hedge fund guys, and I asked him, I tweeted him actually, about what was the age and profile of the people there and who bought, and he said between the ages of 32 and 42. So he's at a barbecue with other guys, let's say they're all late 30s, running hedge funds, and only 2 of them had purchased any sort of crypto, and they purchased it in very small amounts. The other 8 had not. And only 5 of the 10 were even thinking about buying it. So it's interesting. Now, this may be a self-qualified group. You don't know who these people are, if it's random or not. But this is a really good example, right? Where we might tell ourselves, oh man, banks, hedge funds, private equity, they are just foaming at the mouth to throw $50 trillion at this market. But when you go and you talk to some of these managers, you actually meet the people and hear their perspectives, it may be very different. That's why the people behind these markets is so powerful, right? So keeping that in mind, right? I mean, again, this may not be a very accurate sample size, for example, but it's a data point in terms of understanding where the new money is coming from. Where are we in the life cycle? And just from this one data point, it paints a picture like we still have a long way to go. We still have a lot of runway before, hedge funds are really throwing a couple billion, $50 billion into this market. So that's a good thing. That means we got a long way. Last thing I want to talk about, which I mentioned, I kind of alluded to today. I did a tweet last night about, hey, what do you think Ethereum's price is going to be? And this morning, it was above the price it was last night, and only I think 30% of people, give or take, said it was going to go up. Most people said it was going to go down. Some people said it was going to stay the same. And that's obviously another very kind of minute example. But this, if you don't know who George Soros is, I've mentioned him a few times, very controversial figure. He made all his money betting against the masses, right? He's mostly a Forex, right? A currencies trader. And he famously bet against the Bank of England, $1 billion bet, shorting the pound, and he almost bankrupted the entire country. And he, over, I think, 10-year period, he got 4,800% returns, which is unheard of, right? And so he has a theory of reflexivity. And I would encourage anybody who's interested in this sort of stuff, macro markets, when you're starting to look at crypto and thinking about where's this going, how do I make the most money off of this thing that's happening, other than just owning as much as I can now, right? Like owning the best coins and owning the best ICOs. Reflexivity says that a certain number of people believe something to be true. They believe Bitcoin is worth $4,000, right? Because at the end of the day, we can say, oh, it's got blockchain, oh, it's got this, it's got blah, blah, blah. But there's no like money, right? It's very hard to value that other than just picking, like that's what the market says it is. But what reflexivity is saying is that market price, if it's all based on people believing it, it inherently grows on itself because more and more people will start to believe it, which will inevitably move the price up, and it just feeds on itself to push it up and up and up and up, right? So it becomes almost a self-fulfilling prophecy of what the success would be. Now, that's kind of what bubbles are built on, but his whole thing is identify situations where that belief system is causing the value to go up, and then bet against it, because at some point the drop will come and it'll be really severe because the price increase wasn't about supply and demand, or it wasn't about earnings reports, or it wasn't about anything that traditional markets are built on. It's built on people believing it. And as much as everyone believes it, when it gets to a certain point, they also want to take their money out. They want to collect their profits. Like, that's emotions work in both ways. So this is very helpful to think about. It's a bit of a complex theory, and you could read up more about it. There's a lot of articles and books about it. That his book Alchemy of Finance is pretty interesting. And I talked about this, I think a couple weeks ago. But we are going to see this happening. We are going to see the price. It's not going to be a straight line. It's going to get faster and faster and better and better and bigger, right? The key to understanding when a bubble is when the average person believes that we have a long way to go, right? So think about yourself. You got into crypto and you were skeptical getting into crypto. You got in and you saw some gains, right? If you haven't yet, you will see some gains. And you're like, huh, this is pretty sweet. And then you see more gains and you're like, oh, shit, well, I'm just gonna put more money in. And then you see more gains and then you put more money in and then you see it go up again. And that is when you start to realize, oh my God, this is really gonna happen. This blockchain thing is really the future. Like, look at this. This is truly the revolution. And then it goes up again. And that's when you start to see it go really, really big. And the key is when most people get in, right? Like when the banks get in, that is not necessarily the bubble. The bubble is when the banks come in and then we have one or two more big surges and you hear hedge funds starting to say, I think this blockchain thing this is really it. Like I see it, I finally get it. And as soon as the majority believes that they understand it and that we're still at the beginning of this huge, massive thing, when most people think that way and it's just vertical line, that's when we're in bubble territory. And we still got a long way to go. That's why I don't think we have anything to worry about, from a growth standpoint. But that's the kind of stuff that these theories will help you think about so that when you're on Twitter, when you're on Facebook, when you're on Telegram, when you're on Reddit, when you're on Bitcoin Talk, you're not just trying to find out what the next pick is. You're trying to see how do people comment about this? What are people looking at? What is the market feeling? Because that's what they're going to do with their money too. And that is when you start to make the big money. That's how I've made a lot of my money. And that's how I think I will make the most money on crypto. I think ICOs, I think good scalp trades and like just accumulating Bitcoin and Monero and Bitcoin Cash and all these kind of big currencies. And then also being able to watch the macro markets for trends like this and profit off of them. That could be taking money out, that could be shorting it, but being able to identify and watch these, this is how real money's, like big money is made, is these things. And even if you only have $100 in crypto, the more you think about big money moves, the more you will make big money moves, and the more you will start to create big money moves in your portfolio and in your life. That's just how it works, right? If you think small time, you make small money. If you think big time, you make big money. That is a truth of life that has been proven over and over again. We'll leave it at that. I hope this was helpful. Again, Bitcoin, we're going to keep watching it. See how it does in this trend line. NEO may be interesting. I may be eating my words on this, right? Now that I see this volume, this could be a winner. So go check those out. Check out Enigma. Go follow me on Twitter, Carter Thomas, if you want to get these updates. And go check out some of these macro theories. I think that you guys you'll get a lot out of it. And learning about markets, learning about people, learning how decisions are made. Where there's no shortage of opportunity. And so just eat it all up as much as you can. Thank you so much for joining me today, guys. I will see you tomorrow. Peace out.